Now let's assume we want to buy stock that is sold in a different currency from the base currency. Let's assume that our base currency is still US dollars, and we decide to buy ruble stock. In theory, at the time of the purchase, we will have to convert US dollars to rubles, and then convert rubles back to US dollars when we close the position. Our base currency return, or US dollars return, will be comprised of two sources: the change in the price of security, as well as the change in the US dollar-ruble exchange rate. Let's assume we buy 100 Sberbank shares at 4,000 rubles per share for a total cost of 400,000 rubles. We need to tell the system at what exchange rate we bought the 100 Sberbank shares. Let's assume that we purchased 100 shares at 4,000 rubles per share at an exchange rate of 30 rubles per US dollar. Next, let's assume that we sell 50 shares at 4,000 rubles, but the exchange rate is now 33 rubles per US dollar. In other words, the ruble has depreciated by 10% against the dollar. As a result, we did not make any money from share price appreciation, but we lost 10% from ruble depreciation. Unrealized profit and loss for a security in a currency that is different from the base currency is calculated in the same way as in the earlier city example. An additional requirement is the exchange rate must be entered at the same frequency as the security closing prices. Closing exchange rates are required to calculate performance in the base currency. In this case, we did not identify the security, but had we done so, as with the city example, the system would have automatically uploaded both closing prices and closing exchange rates for all required dates. Before going ahead, let's see what the main screen looks like when you have added positions, as well as discuss what other information is present on the activity screen. The activity screen aggregates all relevant statistics such as number of securities in a portfolio, average purchase price, notional exposure in the instrument base currency and in the portfolio base currency, unrealized and realized profit, as well as profit decomposition into profit from changes in exchange rate and profit from price change. Next, let's discuss the net liquidation value field, which is required to calculate your overall performance statistics.